Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on another historic day in the silver markets, Wednesday, January 14th. And as we will dig into today, the evidence continues to mount in terms of what is actually going on. I mean, we can see the price rising, but why is this actually happening? Well, that is what we will dig into today. And we will start by taking a brief look at the pricing, where we saw both the silver futures and the silver spot price get over $92 today. There is the futures made it up to 92.16. The spot price, this one got up to 92.26. Both have sold off a little bit since then, although you can see up $4 in the futures and 360-ish in the spot price. So that's even with a about a $2 sell-off from the peak. Meanwhile, we see the gold price also up $24 on the day and continuing to do well. Yet, really, what is going on specifically? I mean, we know the U.S. government prints money. They've been doing that for a long time, though. Why is this happening now? Because really, when you think about what led many silver investors into this was the belief that, hey, we have this growing debt load, we have this growing balance being taken on by the Fed, and they're going to have to do a lot more debt monetization. And again, both of those are accurate, but it's not, we haven't seen in the West a panic to go out and buy silver. There have been elevated levels of buying, I'd say, over the past month, and we're seeing some newer minted product getting harder to find. It's still a lot of selling going on at the dealers, which is why you're seeing bids underneath spot. So, what really accounts for it? And it's something that we've been talking about a bit here, but we'll continue to mention. And I will say that bit premature to say this is conclusively 100% what's happening. Yet, with that said, the evidence that is available, which I'll acknowledge is incomplete, but at least this is where it seems like the fire is coming out of. So, and what you're looking at here, for those of you that do not read Chinese, this is the Shanghai silver price. So if you calculate all of that out, and if anyone wants to do it, that's a kilogram. So you got to divide that by 1,000. Then for a troy ounce, multiply it by 31.1, and then divide by the yuan dollar rate, which was about 6.98, and gets you to a current Shanghai price of about $102.60. Now, going back to our, we'll call this the futures, the US price, which is fluttering around. Okay, my ticker's catching up, about 90.40. So that's a $12 premium to New York. You want the price in London? There you go, 90 and change. Let's call it 90.54. So just under a $12 premium from China to London as well. And remember, when this all sparked up right around Christmas, it was an $8 premium then. So this is widening out now. I mean, it was, remember, I know that's yesterday's news, back when silver was crossing 75 and Christmas night, people are not hanging out with their family because they're looking at the silver ticker. It was like an $8 premium back then. So it's also widening. Now, again, to recap, this isn't entirely coming out of left field because, that's not the one I wanted. And it's not there either. But if you go on the Substack, you can see back here on November 10th, we wrote about how China was having issues with their silver supply after London had issues, after India had issues, which were plugged by silver that has been coming from the Comex in New York and also China. So let's see if we get this to update here. But anyway, if you scroll back there, you can see on November 10th, also reported in Bloomberg, but after that metal left China, gold and silver surge again while China's silver supply is getting drained. So had this happening in November. Then in December, you see the premium shoot up $8 over spot. Then we get those warnings from David Stein of Kuya Silver, who came on the show and mentioned that he got two calls The day that the premium went to $8 over in China, you got calls from two different groups in China trying to buy the silver that his company produces at an $8 to $10 premium. So we see, and again, Kuya is a newer and smaller miner, so like that they're calling some of the ones that are not as well known. And as David confirmed, he was not the only one to receive such a call. After that happened, it turned out CNBC was watching. And not only did they contact him for comment on his story, but the next day also, David gets a call from someone in India asking the same thing to buy it at a premium. A little follow up there. I had wondered, well, what is spurring someone in India right now to do this, given that they went into a shortage in October? Are they concerned about similar issues? And we got word back that China from this is from a solar manufacturer in India who is trying to purchase silver from Latin American silver producers, and they said China is soaking up all the silver and making it difficult for India to get what they need for manufacturing. So again, you have the premium, and if you want direct evidence, this is at the heart of it. The fact that they're now that premium has gone up to $12. That's not opinion, that's the amount that they're paying, but you have that. And also you have companies and interesting that both China and India, he mentioned solar panel manufacturers, also trying to buy it at that advanced premium. So, and then on the heels of the fact that China was already known to be running into a issue on the lower side. So the evidence is supporting that, not concluding perhaps yet, but in terms of the other thing that silver investors drew them in, I mean, you have a lot of people who were worried about the money printing and the debt loads. Yet once the deficit started developing about 5 years ago, well, do we get to the point where companies simply cannot get the silver that they need to manufacture the products that they're making? Maybe there's a little time on the clock, but these things we're seeing here would certainly be indicative, perhaps not that we're maybe not that we're not at that point, or possibly that we are, because these are the kind of things that, if that were the case, you would expect to see, and we're seeing them right now. And that premium widening out is evidence that the situation is not getting easily resolved. So, what may happen from there? Well, number one, I'd keep an eye on the Comex, where we got up to about 550 million ounces in total. And let me back this out so you can see really the context of this one, because here's what happened in the last year once we started hearing about tariff policies and no one knew whether gold and silver were going to be tariffed, even though I don't remember hearing anything about tariffs on London or England. So you can make your own conclusions about what's behind that. Yet, aside from that, we're still right there at 435 million ounces, or I guess a little bit lower there. Still historically above any period prior to last year in terms of how much silver is in the Comex. So I do see stuff on Twitter about how the Comex is about to close down and declare force majeure. I don't think right now is the time. Now you could say that, is China going to have to start draining silver from the Comex? I'd keep an eye out for that. I mean, if they're paying $10 over, why not get what you can out of here? So we'll keep an eye on that. But in either case, you can see that metal has been coming out again, still more that than at any other point in history. Yet, let's go back to the 6 month. You can see that started right in the beginning of October when London had their crisis. That makes enough sense. And then somewhat leveling off, and then we see in the late in the first week of January, we see more metal coming out of there at a increasing pace. And certainly that is one way that could get filled. How much metal would be allowed to leave and go back to China is a fascinating question to think about. But outside of that, I mean, what's going to happen is metal going to go from the LBMA back over to China? And if it does, how soon does the LBMA run into a problem? Because even with what went over to the LBMA, still did not bring their free float back above the daily turnover on the LBMA. So the conditions that led Daniel Galley to conclude last January that the silver market was sleepwalking into a short squeeze, that was predicated on an argument that is still valid right now. So certainly keep an eye on the Comex. Further supporting that, what we're seeing now is primarily being driven by what's happening in China. And again, I say primarily, not entirely. I mean, the fact that Jerome Powell and Donald Trump are having a public dispute like they are, I mean, I think all these things are factoring in. You look at what's going around in the world, the fact that the evidence that the economy is slowing down is piling up. So, yes, there's a lot happening that is all contributing. Yet, with that said, here, if we look at what has been happening in the ETFs, we did have a really big addition 3 days ago of 25 million ounces, which let's show you how that looks historically because, oh, wow. Here they have it over 30 million ounces, and that would have been the second largest one in the history of the silver ETFs. And by the way, in case anyone forgets this one, that was what happened. I guess that was either the Friday before or the Monday after the silver squeeze in 2021. So let's get a 5 year look at this one here. Here they have it about 30 million ounces. Let's go back to the early one. There it looks closer to 25, but either case on the 5 year. There you got that one, and then this one, which you saw about 120 million ounces reportedly added into the trust over a 3 day period. And now you can add that we just had, so that's the 12th. This would be the 11th, or I guess that would have been the Friday of last week. Either case, that's the second largest reported 1 day addition into the silver trust in history. Now, I wouldn't doubt that that factored in because if you have this, even if this is going into New York or London vaults, that's still metal that has to come from somewhere. Yet, you can see this is going back to here we are in October of last year. Dipped for a while the price came back in a little bit after crossing 50. And this blue line is the amount of metal silver stored in the ETFs. You can see there was, yes, there is a big spike up here when that large inflow occurred, but because there was some selling right there, what I'm getting at is that if you smooth out that dip, this is still roughly the same pace of ETF additions that we've been seeing over the past couple months. I don't know if you want to call that a shock, that one there. I guess fair enough. I guess we had another large one back there as well. But it's not as if all of a sudden the ETFs just tripled the amount of silver they had put in. Similar with retail, there have been more buying reported from the dealers in the past couple of weeks, in particular. Yet there's still a lot of selling being reported, which means this isn't the price is not, in my opinion, going up because the West is now piling in. If you want to look at the ETFs, call that institutional. You can see silver is going in there. It's been steadily going in there. Yet, what accounts for what is happening right now in terms of the silver price not only soaring, but soaring even further in China? And another possibility we could take a look at here is whether this is just speculation on the Comex or a short squeeze. I'm not doubting that there are some groups that have been caught off sides and are getting squeezed, yet take a look at this. This one's pretty wild. So here we are back on January 8th, and you can see there you get the low of 73.50. Well, if 73.50 up to 92.16. That's almost $19 in less than a week. Today's the 14th, so that means the 8th was last Thursday. $19 in a week, and that was after it had just gone up. You go back on November 21st. Let's get that one there. That's the 24th. So that was after silver had gone in mid-November from 48 to 72 by January 8th. So it wasn't like maybe typically what you'd expect if there was a short squeeze. Well, maybe the thing moved a little bit and then there's a big surge higher. I mean, this latest this almost $20 move occurred in the last week after you'd had it rise $25 in the previous month. And that just seems like, at least if you're as far back as I've been watching gold and silver since 2009, and certainly talking with a lot of people who've been watching it a lot longer. I mean, a short squeeze doesn't normally take you $40 higher in silver. So can that be contributing? Sure. But we would have seen a big sell-off a long time ago if this was just the normally functioning market and we're watching speculation go on the Comex. Now, is there speculation? I have no doubt, although that's why I pulled up the ETF chart because it's not like a wild wave of mainstream money just piled in the last 2 weeks. I'm not seeing evidence of that. So that is why does this mean that, and actually what could it mean? A, does it mean that we're about to see an overt shortage breakout in China? I don't think you can say that just yet, but it certainly is saying that the conditions are in place and that it is possible that we are already seeing the beginning of that. Now, if there's silver coming from somewhere, I don't know, maybe 100 million ounces comes over from the COMEX. That's actually possible. Currently have 435 million ounces in there. And you could even take 100 million ounces out of the COMEX registered stockpile, which is currently at 123 million ounces. Although, again, remember that we're in the middle of a tariff and commodity war where China's restricting their silver exports. And let me find this one for you. I think this did not see this until yesterday, so I did not have it in the video I did, but further supporting why you would not imagine a lot of that silver going over. Let's see, where do we have our press releases? Because there was a note, basically, there we go. Besant and several foreign counterparties convened a meeting on securing critical minerals and supply chains. This wasn't just US government officials. Here we have Canada, European Commissioner for Economic and Productivity. Mexico's in there, France, a whole list of countries. Did not share a lot of details, but said they were discussing ways to quickly address key vulnerabilities in critical mineral supply chains. So you would think letting the COMEX get completely drained and shipping it over to China would be type of thing that Scott would not be interested in. And just interesting things happening there. Last note before we wrap up today, going to keep this one somewhat on the shorter side, but you had an interesting message from Donald Trump. This came out on January 12th, and he's talking about the decision by the Supreme Court on whether to uphold his tariff policies. Apparently, if they're not upheld, it's not good. You could summarize down here. If they're not upheld, he says we're screwed. But let's take a look. The actual numbers that we would have to pay back if, for any reason, the Supreme Court were to rule against the United States of America on tariffs would be many hundreds of billions of dollars. And that doesn't include the amount of payback that countries and companies would require for the investments they're making on building plants, factories, and equipment for the purpose of being able to avoid the payment of tariffs. When these investments are added, we're talking about trillions. It'd be a complete mess and almost impossible for our country to pay. Anyone who says that it can be quickly and easily done would be making a false, inaccurate, or totally misunderstood answer to this very large and complex question. It may not be possible, but if it were, it would be dollars that would be so large it would take many years to figure out what the number we're even talking about and even who, when, and where to pay. So large we can't even calculate it, figure out who to send a check to. Remember, when America shines brightly, the world shines brightly. In other words, if the Supreme Court rules against U.S. National security bonanza, we're screwed. Well, I would imagine there's some degree to which that's factoring into gold and silver pricing, especially because, at least according to Polymarket here, I've seen several other posts similar to this. Right now, we are pricing in a 32% chance that the country rules in favor of, or the Supreme Court rules in favor of Trump's tariffs, which leaves us with a 68% chance that, according to President Donald Trump, we're screwed and owe so much money that it will take years to even figure out the amount and who to pay it to. And this is while his administration has had the Justice Department issue subpoenas and threaten an indictment of the Federal Reserve current chairman, not for much longer, who took the somewhat unprecedented step of giving back basically a big FU in his response. It was shared on Twitter and on their website, of course. So I guess all of that aside, I'm not trying to take sides here, but I guess if the point is to lead us into safe harbor, if the risk of the penalty of the tariffs being overturned is that enormous that we're just screwed to a degree that we can't even figure out how much money we would owe, it seems like there's a large probability of an outcome that, according to the president, the country can't handle. And we won't get into the implications of what that does to the debt load and a whole variety of other things. Although, when you look at the gold and silver pricing, I would suggest that has quite a bit to do with it. So, anyway, hopefully that one was helpful. And in wrapping up today, would like to give a thank you to First Majestic Silver, who kindly brought us today's video. And as you can imagine, it will be fun to see. I would say we're about a month away from First Majestic Silver's earnings. Talk about timing of a lifetime for a deal. When they acquired Gatos Silver and closed on that last year, that gave them additional ounces, and certainly to have the rally really accelerate when it has, that's going to work out well. And to put that in context, they released a couple months ago their third quarter earnings, which go from here to there. And then the fourth quarter earnings, even though we're just getting up to the $90 now, and that won't be included, you can see that we were getting into the 60s and 70s, which is going to be coming out in the fourth quarter results. And to find out more, you can go to firstmajestic.com. And fortunately, good news, hit the subscribe button and notification bell, because we were scheduled to have Keith Newmeyer join me on the show back in between Christmas and New Year's. But looks like it'll be tomorrow at 9:30 a.m. Eastern. So can't wait to hear what he says. Man, would that be fun if we hit $100 silver with Keith live on the show? Well, we'll have to wait one more day to find out. But anyway, congratulations to everyone who's been invested in following this story. Another historic day, and hopefully that gave you some thoughts on what could be going on and what that could lead to if that is indeed the case. I will keep you posted as always, and we'll see you again soon.